What's up, traders? Welcome to another video. Now that you know how to navigate the tool, let's start learning how to read the chart, the price action and indicators. In the central panel is where all action happens, where trading battles are won or lost. What you see on the screen are candle bars. They have a body and two wicks, one on top and one on the bottom. Each candle represents a day, since we have the daily time range selected. We can see here, if we change to 5 minutes, then each candle will be a period of 5 minutes. As we can see, we have green candles, and these are days where the price of the crypto went up. We also have red candles representing days when the price of the crypto went down. On a green candle, the bottom of the candle represents the opening price for the period, and the top of the candle represents the closing price. On the contrary, on a red candle, the top of the body represents the opening price and the bottom represents the closing price. So if we look here, we can see a green candle, for example this one, where we open at around 127 and then we close at around 146. And then if we see a red candle, for example this one, we open at 168 and then the price went low to 152. On both candles, the top of the wick represents the highest price point the market hit within that period, and the bottom of the wick represents the lowest price. So as you can see, for example in here, the lowest price was 134, okay, and it actually went up during that period and ended up closing in 146. There are many candle patterns and I encourage you to research them. For example, candles with big bodies represent a lot of volatility in the market and a huge price difference. For example, this one and this one. A candle with a short body and equal size wicks might indicate indecision in the market, so both selling and buying forces are canceling out. It might indicate a trend is starting to lose its force or momentum. Some patterns might indicate trend reversal, for example, and these are important because using these little details with other indicators can help you take the best trading decisions. Now, let's talk about the kind of trends that candles will form in the chart. We'll start using some of the tools along the way to explain the concepts. When we see the price moving in a direction, such as up or down, we call this a trend. In an uptrend, the prices will tend to make new higher highs, so the price will always go high. A downtrend, on the contrary, is a series of lower prices, so the price will always go low. We'll use a price analysis and some technical tools to determine the direction of the trend and spot potential trend reversal points, so that then we can decide when is the proper time to buy more crypto or to sell your crypto. Let's look at the graph and see how it looks. So if we move to the dot, for example, .USDT, we can see we have a downtrend. Okay, prices are going down, all the way down, and then we can use some of the tools like the arrow to point specific points. In this point, there is a trend reversal. So the trend changes from a downtrend to an uptrend. In an uptrend, we can see the prices will go all the way up, will continue to go up. Right? They go to a higher price. So we will see prices going high, then a pullback, then a new higher high, a pullback, a new higher high, which is higher than the price before, and so on. Okay? We can use some lines, for example, to better illustrate. So we have trend lines. So we see, okay, if the price doesn't cut the line, then we see that there is a continuation in that trend. We can see another line here, for example. Okay. Now it comes to another point where we see something happening. Okay, there is a trend reversal here, and then we go from an uptrend into a downtrend. We see the prices going low all the time, and the price will eventually make a pullback, like for example in here, to then continue to go lower. Okay, pullback and lower. Later on, we are going to use certain indicators like the relative strength index, the MACD and volume indicators to signal entries and exits. Okay, So, but before going into detail about all the indicators, let's also know that there are some patterns in the charts that might indicate a trend continual or a trend reversal. Chart patterns are geometric shapes found in the graphs that help us understand future price action. This will guide us predicting where the price might go. When we see these patterns occurring in the middle of a trend, so this is the signal that most likely the trend will resume. So trend continual patterns are triangles, flags, rectangles. Okay, let's see how they look in the charts. If we change here and we go to Shiba Inu pair, Shiba Inu dollar, we'll see that we have an uptrend here, right? In the middle of the uptrend, we can see some sort of formation. This is a consolidation structure, and it has the shape of a triangle. Okay, so when the triangle breaks on the up direction, then we know for sure that this is a continuation of the trend. Okay, the price is expected to go even higher. Then there is a reversal, and the price starts going into a downtrend. Okay, so they usually look something similar to this, like a triangle or a consolidation structure, where you see the prices in they seem to be like in some sort of range. Okay, a rectangle. Now there are other patterns like trend reversal patterns, and the reversal is a change in price direction. It occurs on an upside trend or a downside trend, and this is key for us since we need to take appropriate actions when this happens. Okay, following an uptrend, a reversal will cause the price to drop, and a reversal after a downtrend will change the direction of the price so it can go all the way up and rise again. The indicators we will be using will help us detecting those reversals. Okay, in the next video we'll be learning how to use the indicators, so don't worry, let's jump right into it.